Thank you so much, Peter, for taking the time. If there's one aspect that global investors are now looking at, it has to be commodities. So first of all, could you give us a little bit of context in terms of where we stand right now?
Well, Alex, that's a very deep question, and it's a question I'd like to answer briefly. And I will say this: I think that the super cycle, we're all understanding that it started around about 20 years ago, and it's not uncommon for them to run in excess of 30 years. And I think this cycle will be similar. And we've had valleys and peaks over that period. And we've lived through 2 years of a COVID lockdowns and the impact globally, and now on the other side of that with inflation. And I think the overall demand will only become more dramatic leading into this decade. More mouths to feed globally, more fuel to consume, more pots and pans to buy, and overall consumption patterns. So I think that this decade will be a strong decade for a demand picture as far as commodities, Alex.
Okay, so that gives me a perspective on where things stand in terms of a demand standpoint, right? But the issues that we've been facing, Peter, over the course of this pandemic and also where we stand right now is from a supply perspective as well, because you've had fits and starts in terms of production, and that's causing a lot of problems. So is that something, according to you, that will ease out, and therefore do you see prices cooling off a little bit?
Well, as far as all of the supply issues, and there's supply constraints, or you could have bottlenecks, or all of the logistic components as far as transporting goods, because they're hard goods. They come out of the ground, as we know, or they grow on a tree, or they mine them. They've got to be transported. And the issue at hand is that there are so many components that go into the supply lines and to ship goods all over the world. Now, I'm not one to look into a half glass full. I'm conscious as far as global demand. I'm conscious as far as the impacts as far as COVID and what it's had on workforces globally. And all of these components have gone into, in some ways, price spikes with inflation, high US dollar. And I sit here thinking that we don't know how long this pandemic's going to run for, and that's the unknown that creates much angst for producers and, of course, the consumer globally.
Yeah, and the war in Ukraine hasn't helped matters either. I want to break things down into various major commodities, and perhaps that will help our viewers understand where things stand right now. So the first one that I want to speak about is crude oil, because you've had crude oil that has been elevated for quite a while now, and a lot of moving parts there. What are your own expectations in terms of where crude is headed, not just in the near term, but over the next 1.5 to 2 years?
Well, Alex, if we put our mind back 2 years, we were one stage there, we nearly touched negative $40 a barrel, and that was a black swan event. But we've had such a huge price spike really since the start of the year. January, February, March was just off to the races, and then we've seen corrections over that period and incredible price volatility. And the overall theme from the demand picture, and certainly the price spikes that we're seeing for diesel and for natural gas and crude oil, of course, is one that many analysts are saying has got more legs to run. And that worries me from an inflation standpoint, and is 120 the new normal for over this next 3 to 4 months, the Northern Hemisphere summer. So that could well be the case, Alex. Stronger prices, higher prices, and that in turn creates more problems for the consumer.